Good morning, good afternoon, good evening, whatever time of day it is, wherever you are. Welcome to the inaugural, it's easy for me to say, PiQ on the Block, which is a new series myself and Cam, the wonderful Cam from Institutional Fi, where we will be interviewing, well, I say we, Cam, the smart man in the room, will be interviewing other smart people in the room and the thought leaders and important people in crypto, basically. And we're going to start off with, and we are very, very happy to say, start off with the awesome André Dragosch, who is European Head of Research at Bitwise. Let me just make sure he's added. Let me just, so 1 second. I've already invited you, Andre, so you might. Is this going to work? I think it might be caught in the ether if it's gone one way. Let me cancel the invitation. Let me request. There you go. Hang on a second. Right, let's see if that's working. Perfect. I think he's there. But I tell you what, before we get started, I'd best get the legals out of the way because, yeah, I'm a good-looking boy and I'll get passed around the prison like rechargeable batteries if I don't. As usual, nothing discussed on this Spaces session constitute trading or investment advice or infers any kind of endorsement by PiQ or that of Institutional Fi, or indeed that of the hosts and the speakers, which, as you know by now, is myself, Ryan Paisley, Cam O'Connor, and Andre Dragosch. Cam, are you there? I think he's there. No. Cam?
I think he's still a listener.
Oh, yeah, you're still a listener. Hi, Andre. One sec.
Hi, Ryan.
1 sec. Let's work out what to do here. Right. He is there, but he's labelled as a co-host. Spaces being spaces. Let me just WhatsApp him quickly. Instify. 1 second, let's get this sorted. I do love a spaces shenanigans. 1 second. Right, request, what's this here? Cam, can you hear us? This is going very well. Right, 1 sec, let me boot Cam off or remove co-host. Cam, if you can hear me, you're going to need to leave. Right, okay, he's left. We'll just put this down to teething problems. And also, Cam is a nightmare we're trying to set up spaces. So let's try this again. So I'm going to resend this, invite to co-host. Right. Hopefully this is being sent. Cam, can you hear us?
Yes, I can. Apologies for that.
Can I make a suggestion? You do not also try and log in with your other account because this is when
No, I'm not gonna.
Right? Because
we don't want to cause any.
This is definitely so. Andre doesn't realize this, but so the daily spaces, the crypto blast that we do. Cam's already on a yellow card for trying to log in as 2 accounts, and then it messes up the matrix. So anyway, I'll start again. Andre, thank you so much for joining us on our first PiQ on the Block. I know Cam is very excited to ask you a load of questions. Listeners, just to remind you, this is slightly different from the usual daily market crypto blast that we do. This is more of a long-winded, that's the wrong way to say it. This is more long form interview where Cam is going to be asking the great and the good of crypto, all the questions that matter, and hopefully get some incredible value for our listeners. And also, I'm there just sitting in the corner, just going to be asking random questions and hopefully put a smile on people's faces when I ask the most ridiculous questions that everyone should already know the answer to. So, guys, Andre, thank you very much for joining us. Cam, I'll hand over to you.
Thank you very much, Ryan. And thank you everybody to all of our listeners who are tuning in, either live or on the recording later. Really, really excited for this conversation. Hopefully we'll get Andre's view on some Bitcoin market dynamics and the future outlook. Hopefully, if you stay to listen to the end. And so, Andre, good afternoon. How are you doing, buddy?
Thank you so much, and happy to be here. And thank you for the invitation. I know it's the very first episode, right, of the series.
Yeah.
Yes.
So
Honestly.
in 10 years time we'll be looking at back and you go, yeah, we'll make sure like we'll get together, we'll have a little anniversary.
Yes, thank you so
Uh,
much.
I know, more than welcome, and honestly, thank you for sparing some time out to have this interview. I thought maybe we could start off with a little bit of an introduction from yourself.
Yes, sure. So my name is André Dragosch. I'm leading research efforts here in Europe at Bitwise. Privately, I've been investing into crypto assets since 2014, which is around 11 years. But my first institutional experience started in 2018 when I was writing primers on crypto assets, blockchain tech, right, for family office. But back then I was a cross asset analyst. I was analyzing all kinds of things, right? Equities, bonds, FX, commodities, and the timing when I started to go full time on Bitcoin and crypto assets was when I joined Deutsche Digital Assets. They used to be called Iconic Funds, but they rebranded to Deutsche Digital Assets. I became head of research there, like focused 100% on Bitcoin, crypto asset research. And then I joined ETC Group in 2023, which was acquired last year by Bitwise US. And that's how we became like Bitwise Europe, formerly ETC Group. And now I'm head of research in Europe.
Amazing. Thank you
I got
very
to say, I
much.
got to say,
Go on.
Andre. So this is the fact that you were very early doors, like also like TradFi markets, and then kind of moved over
Yes.
to crypto, very early doors. Reminds me very much of my business partner Paul Gordon, who I can see listening in here. So Paul was ex floor trader on the Life Exchange, short term like a broker as well, and he same as you, TradFi, very early doors, rolled into crypto. And it seems like the OGs, as the kid call them. It's kind of it's uh it's it's kind of refreshing to speak to someone that's been involved for so long, because obviously, as we know, there's a lot of people that kind of come and go. There's been a lot of a lot of churn in the industry. So to speak to someone like yourself that's been in here for such a long time, like you've seen it from from all the way up, all the way down, and all the way back up again, right?
It maybe has to do something with the fact that you need to understand money first before you can
Yes.
understand
Mhm.
Bitcoin and all the others, right?
No, absolutely.
I think it's such a complex topic because I think Bitcoin itself is not really hard to understand. I'm not speaking about the tech, right? Tech,
Thank
of
God for
course,
that.
but like the concept of Bitcoin and the investment narrative is quite simple, right? It's a limited asset, right? You have to max 21 million coins. You have a declining supply growth schedule, right? It's becomes scarcer than gold in terms of production growth rate and so on. So it's quite a simple investment narrative. But in order to understand this, in order to understand Bitcoin's utility, right, you need to understand the workings of the monetary system,
Yeah.
which is quite complex. And so once you understand that, right, I think it's easier to come around Bitcoin and also other crypto assets, right? Why do you need a scarce asset in the first place, right? I mean, we have PayPal. Why do we need Bitcoin, right? Why do we can pay online already, right?
Yeah.
People don't understand the utility because they don't understand money, and I think that's the reason why if you have a background in macroeconomics, not like the mainstream macroeconomics. I did my PhD thesis on a rather unorthodox macro theory, right, which is the credit theory of money. And it's not the one that's being taught at mainstream universities. Maybe that's the reason why
Yeah.
I came around to Bitcoin a bit earlier.
I think it's so. I promise I won't hijack. I know Cam's got loads of questions for you, but what I think
Yes.
really is interesting there is you've touched on something that I'm a massive believer in for all markets. It's very easy to overcomplicate things, right? And as you said there, it's like when you break it down, it's kind of if you try and simplify, obviously staying away from the tech side of it, you can simplify it and get your head around it relatively easy, like you just said. But I think, a lot of people, whether or not it's subconsciously or for whatever reason, but we see it in traditional markets as well. It's like it's almost, some people feel the need to overcomplicate things, which makes, which puts, needless barriers in front of you to be able to understand the product you're looking at.
But I think what many people don't understand yet, at least, is it's almost absurd that money can be printed out of thin air, right? Money can just be created, and I'm not talking about central banks alone, right? It's the whole commercial banking sector, right? I mean, HSBC can create money, right? Santander, all these private commercial banks can create money. And many people don't know that, right? They don't know where money actually comes from, right? Where does money comes from? If you ask like 100 random people on the street, probably 90 people will say, "Oh, it's coming from the government, right? It's being printed."
Yeah. Oh no, absolutely. Yeah,
but
absolutely.
It's not true, right? We know that like more than 90%, 95% of the whole money supply is created within the banking sector, right? That includes commercial banks, but also, of course, the central bank.
Yeah. No, absolutely. Cam?
Yeah, no, I was listening there. It perfectly kind of like summed up some of my first two questions. So you did a
Go on.
great job, Ryan. Honestly.
Oh, stop it.
Honestly, you're doing a great job. Look at this. Host this with the mostest. So I'm just kind of looking back and taking in that unique blend of experience that has seemingly really shaped your approach to, researching crypto assets. How has there been any particular surprising trends that you've uncovered in the crypto space over this past year?
I think you mean most interesting or most surprising?
I suppose they're two different questions. Let's go with
gonna
most
say,
surprising.
sounds-
Let's go with most
Okay.
surprising first.
Most surprising.
It sounds like a two-part question.
So I think what was most surprising to many analysts, including myself, I think, was the development of Bitcoin corporations, right? Because I think many analysts thought at the beginning of 2025 or the end of 2024 last year was that 2025 was rather about sovereigns buying Bitcoin, right? US government buying Bitcoin, lots of Bitcoin. ETFs would have huge continuous inflows, right? And all that stuff. But as a matter of fact, corporations, they have been the primary buyer of Bitcoin in 2025 so far, at least year to date, right? We don't know when the US government will start buying Bitcoin. It's most likely going to happen this year, but they haven't started, right? And the ETFs so far had net outflows. I mean, excluding the last 2 trading days, which have seen record inflows again. But so the primary buyer of Bitcoin this year has been corporations, and I think that took many by surprise. And now corporations year to date, they've bought around 2.4 times the amount of new supply, right? And I think they've provided somewhat of a floor below market prices, right? They've provided some kind of support because we had net outflows from ETFs most of the time because of risk off, essentially, right? And I think that's a huge it's an overlooked mega trend. But I think if you saw the news today with Cantor and Tether and Bitfinex and SoftBank building that new kind of corporation, I think
Yeah, do you know what? Funny you should
it
say
probably
that.
won't be overlooked for too long.
Funny you said that. Literally, that headline has just popped up in front of me whilst you've been talking. Yeah, Tether, Cantor Fitzgerald, and SoftBank, a 3 billion Bitcoin treasury company. It's called 21, right? With Jack
Yes,
Mallers.
21 Capital, exactly. I think the biggest story about it wasn't necessarily the fact that they'd launched with 43,000 Bitcoin or that they funded with $3 billion in equity. I think the biggest story was that SoftBank would contribute $900 million worth of Bitcoins. And so everybody thought, like, when did SoftBank acquire
Yeah,
Bitcoins?
where did they come from?
So it's one of these surprising stories, that broke just today, where he thought like, okay, if SoftBank has already bought Bitcoin, how
Who
many
else has bought? Yeah,
corporations
yeah, yeah,
have already
yeah.
bought that we don't know of yet?
So,
Don't know that.
so from what you're saying there, so until today, no one knew that SoftBank had this many
Yes,
Bitcoins. Oh my God. Oh
yes.
wow. Oh, so that this is a good day to be doing the interview then.
And so maybe it speaks volumes in terms of the surprise about corporations, because I think we started last year with less than 300,000 Bitcoins on corporate balance sheets. It's now more than 700,000.
Oof.
So that number has doubled, right?
And that's just the ones we
And
know about.
and by the way, we've just launched that ETF in the US. So my US colleagues, they've launched this. It's called Bitcoin Standard Treasury, Bitcoin Standard Corporations ETF, and includes, as of today, it includes 22 companies that hold more than 1,000 Bitcoins, right? And yeah, it's a mega trend, I think.
Yeah,
And
it
A
definitely
I mean,
question on that
the
then.
rationale behind it is also quite simple, right? If you break it down, it's, I mean, fiat monies lose value over time, right? There's fiat monies are subject to inflation, right? Because of money supply expansion, and holding large cash reserves is suboptimal for corporations because they lose value over time. So it's also suboptimal for shareholders, which is why holding Bitcoin, which increases in value, which can at least maintain your purchasing power and increase your purchasing power, right, over the long term, is definitely more beneficial. And that's, I think, the key reason why you'll see a huge increase in corporate adoption as well.
it definitely does. Sorry, Cam, I know you're about to ask another question.
No
It definitely
worries.
does feel from an outsider's point of view, like me, it definitely does feel like, we are very much. I know it's that cliche. It's like we're so early, we're still so early, but it does really feel like on the corporate side, it does really feel like this year or the last maybe, I don't know, 8 months or so, it does feel like the corporate side is really starting to get like turn up a gear and get the flywheel spinning. I think anyone suggesting that, the people that are going to bought, they've already bought. I think, they're in for a shock. It does feel like there's so much money, especially as the regulations make it far easier for companies and corporations to get it onto their balance sheet. It does feel like we're at the beginning of something quite major on that front, like you alluded to.
Yes, exactly. Also, regulatory clarity, the change in accounting standards, especially in the US, right? But it's
Oh
not
yeah,
only happening in
exactly.
the US. If you've been following the news on corporate treasury adoption of Bitcoin, it's been Asian companies as well, right? European companies. So it's across regions. Of course, I think the mega trend is more pronounced in the US, right?
Yeah.
Could have several reasons, not only regulatory reasons. Could be like access to capital markets and so on, right? But yeah, I think it's a global trend. It's a global phenomenon, right? It's
Yeah.
MetaPlanet has been buying Bitcoin like crazy. There's another, I think, handful of Asian companies that have started acquiring Bitcoins. So I think it's a global trend.
So on that, I was looking through the slide deck that Bitwise published just it was a couple of weeks back for the 2025 Q1 report, and it showed that companies now hold over 6.5% of Bitcoin supply, and we saw that figure initially double in 2024. I was wondering if we could get your thoughts on what do you predict for corporate treasury adoption by the end of 2025? I know it's not too far away, but we are seeing that massive increase.
Yes, we are seeing a massive increase. I think at the end of 2025, you'll see hundreds of corporations with Bitcoin on their balance sheets. So from today's numbers, it's quite likely that we'll double in terms of Bitcoins on corporate balance sheets. That's not an official kind of prediction, but I think it's definitely possible that we double at least from here.
Absolutely. So kind of like zooming out and looking more toward Europe's side, how are European investors approaching crypto differently from their US counterparts? And this kind of two-part, and what role does Bitwise Europe play in bridging that gap?
It's a really good question, but I think there are definitely significant differences in terms of risk aversion, right? Which might be very typical differences between Europeans and Americans, right? I mean, Europeans are generally more risk averse than
Yeah.
Americans,
Yeah.
but
Definitely.
but I think it used to be the case that retail adoption, crypto retail adoption rates in places like Germany, Switzerland, Netherlands, they were significantly higher than the US because of more favorable and clearer regulation, right? And I think what surprised many analysts in Europe was, especially in Germany, was the pro crypto stance of the BaFin, the German regulator, when it allowed Bitcoin ETPs to trade on the
Yeah.
Frankfurt Stock Exchange in June 2020. All right, that's almost like 5 years ago, right? And so it was actually ETC groups now, Bitwise Europe. Bitcoin ETP was the very first ETP that was launched in Germany on the Frankfurt Stock Exchange. So it's like 4 years ahead of the US spot Bitcoin ETF launch. So I think that surprised many, and but I think that has now changed significantly with the US ETF spot ETF launch, Bitcoin ETF launch in January 2024, and especially with the new administration that,
Yeah.
in my view, has turbocharged adoption in the US. Right, I think Americans really hit it out of the park with their launch. You had record inflows in year one, and so in general, Europe has been ahead of the US over the past couple of years, but it looks like the US is catching up very, very fast.
This, I suppose, Cam, this is quite timely because myself and Cam were talking actually today on the Crypto Blast, the daily show we did, where we kind of joked that, Europe was definitely the first one to get going, but as with a lot of things with the way the EU works and the way the bloc operates, that why have one meeting about or one conference about a situation when you can have 20? And it does feel like Europe were the first to get involved, but they're going to probably potentially be the last to actually finalize anything. And in the meantime, we've seen Trump come out of nowhere, or the US come out of nowhere, and very quickly make way for regulation and adoption. And if you're a company that's looking to add crypto to your balance sheet, why would you do it under under the banner of the EU when you can be in the US and kind of be much more favorable in much more favorable circumstances?
No, that's 100% true. I think there's been more regulatory clarity ahead of the US, and I think there still is, because crypto regulation in the US essentially is built on this more or less outdated securities
Yeah.
law from the 1930s, right? And you have really dedicated crypto asset regulation, markets and crypto assets, right? And the MiCA regulations in place across Europe, which is harmonized in Europe, is the same across the European Union, same Germany, same France, and so on, right? And so it's very clear. But I think the US is catching up really quickly, and they'll probably soon do more. I mean, more acts, right? They've just passed the new stablecoin act, I think, but I think they will be catching up pretty quickly.
Yeah, that's the vibe, definitely.
Yeah.
The Stablecoin Act has a very very apt title of stable, which is brilliant. So yeah, we kind of touched on that with the EU, being ahead of the US in terms of some aspects of crypto regulation. I was wondering if you saw any positive impacts with the introduction of MiCA in terms of investor confidence.
It's a really good question. I think in places like Germany, I think you had regulatory clarity ahead of this launch, ahead of this MiCA launch, because I think MiCA was more or less adopted from the regulatory framework that was already existing in Germany. So we had, crypto. You had a crypto asset regulation that was allowing funds to like specialized closed funds to buy up to 20% in crypto assets, 20% of AUM, well ahead of MiCA, right? Yeah, ETPs were already allowed, so exchange traded products were trading. Bitcoin exchange traded products were already trading since 2020, right? Like I mentioned, and so on. You had Bitcoin futures on Euronext, Eurex, right, on the derivatives exchange, and so on. So I think in Germany, which is like still one of the core markets, also at for us at Bitwise Europe, was already quite a pro crypto stance, you know, and so there wasn't such a huge effect, you know, that came with MiCA. But I think in general, if you look at like the usual pattern, how when the timing, when any kind of regulation is being implemented, but I'm specifically talking about crypto regulation. So timing wise, from the point in time the regulation is implemented, right? And market players starting to act upon it, right? Usually it takes around 12 to 18 months of time lag, you know, between these two things, because until market players really start to act based on this kind of new regulatory environment. That's at least one of the observations that I made in the past, you know. And so my expectation is for MiCA, you'll see like a very visible impact starting from 2026 onwards across Europe. You know? That's like at least my expectation. So these kind of regulatory changes, for them to take effect, right, usually takes at least 1 year, you know.
That's really interesting. So it's kind of like looking at sort of a technical and research insight perspective. How does Bitwise Europe's research team balance the short-term market signals that we get with long-term trends when looking to advise clients?
It's probably one of the most important questions, right? So I think our narratives, investment narratives, they generally center around the structural themes, right? Like increasing adoption, increasing scarcity of Bitcoin, the search for new reserve assets, search for a new store of value, right? For Bitcoin, in terms of altcoins, the mega trends like real world asset tokenization, stable coins, etc. And so we focus on these long-term trends, the long-term drivers, and the short-term gyrations are rather used to advise clients on attractive entry points, right? But our key argument remains that clients should generally be invested on a strategic basis, right? Not so much on a tactical basis and trade like in and out. Because, I mean, plenty of studies, they've already shown that a small allocation can have a sizable impact, right, on risk-adjusted returns. So I'd say get off zero, right, is our constant gospel, right? While occasionally we also bang the drum for BTFT, right? To buy the dip. But I think our key narratives, we just advise clients to get off zero, make a strategic allocation, small allocation at first, right? Rebalance frequently on a monthly basis, right? But because that's the way you can also control the volatility of the asset class, right? You can control it, but at the same time you can harness it, because if you do monthly rebalancings, right, of, for instance, a small Bitcoin allocation, you don't run the risk that like the weighting of the Bitcoin position becomes like out of hand, you know, uncontrollable. Like if it starts outperforming like crazy, you can end up with a weighting of like 50-70%, you know, of the whole portfolio. So your whole multi-asset portfolio, which is supposed to be which is supposed to consist of stocks, bonds, and so on, is suddenly a Bitcoin portfolio, right?
Yeah.
But you can mitigate this kind of risk by just rebalancing more frequently on a monthly basis. So then you control the volatility of the whole portfolio, and you mostly get only the benefits, right? Which are higher risk-adjusted returns. So you get higher portfolio returns with a minimal increase in portfolio volatility. And I think that's the key to investing into Bitcoin and crypto assets in a multi-asset framework.
I mean, I personally think that's very, very sensible, and that is pretty much what every investor wants, isn't it?
Exactly, because I mean, portfolio theory always talks about, yeah, we need to build portfolios that are as efficient as possible. What does it actually mean? Efficient as possible means either most return for for minimal risk, right, or vice versa, minimal risk with most of the return, right? And so, I mean, if you just add Bitcoin to that mix, so you have like a possible array of asset classes, right? Stocks, bond, commodities, alternatives, infrastructure, I don't know, convertible bonds, so hybrids, and so on. And suddenly you add Bitcoin to that mix, your whole universe of efficient portfolios suddenly changes, becomes so much more like diverse, because we made a study once on multi-asset portfolios that only invest into the global stock market, right? All kinds of regions, including emerging markets, all kinds of bond markets, corporate bonds, sovereign bonds, and also commodities. Not only gold, like energy commodities, industrial metals, and so on, precious metals, and so on. Yeah, so very diversified portfolio. And then we started just adding Bitcoin into that possible mix of assets. And usually what you get is this efficient frontier. I don't know whether you've seen this, like in this kind of return risk diagram. And it was quite, yeah, it was like a very limited set of possible portfolios. But after adding Bitcoin, this kind of efficient frontier expands like crazy, you know. So you have significantly more possibilities to build multi-asset portfolios just by including Bitcoin. And so it makes so much sense, you know, from a strategic point of view, from an asset allocation perspective, just to add a little bit, you know.
That's really interesting. So taking the risks, looking into the technicals and the research and insights that you've done. I remember in late 2024, you predicted that Bitcoin could reach as far as $172,000 by the end of 2025. You know, what assumptions kind of underpin that forecast, and how confident are you in that today?
So that particular forecast was based on the increasing scarcity of Bitcoin induced by the halving, which the last halving happened in April 2024, so last year. And what we analyzed, when we analyzed the previous halvings, what we found out was not only that halvings are statistically significant, right? They're not priced in advance, although it's public information, right? What we also found out was that the highest performance effect is usually around 400 days after the halving. So there's a significant lag between the halving event itself, which tends to be a non-event, right? Nothing burger, essentially. And like the real performance effect. So you get the highest statistical effect around 400 days after the halving, which was in 2025, right? Was more than 1 year ahead. And these 172,000, that was essentially an equilibrium price target, which means you can have both over and undershoots of that target, right? But as you can see, based on, for instance, Bitcoin exchange balances, scarcity has been increasing, right? Bitcoin exchange balances, they've been drifting lower, right? Despite the recent price correction. And this is also the reason why I don't think we are in a bear market, right? I think what you usually see during a bear market is you see an increase in supply on exchanges, right? Exchange balances tend to go up, right? We've seen quite the opposite. Like exchange balances have continued to go down, which implies a continuous supply deficit on exchanges. And it also plays into that kind of halving scarcity thesis. Many people say, like, many analysts say, like, I think the 4-year cycle is dead. I think the halving cycle is dead. And the key argument is the supply shock of the halving itself in relation to the existing supply and circulation becomes smaller and smaller over time with every halving. And it's true. I mean, these claims are true because, I mean, it's just a fact. Of course, the latest halving, the halving effect, so the reduction in supply in relation to the existing circulating supply back then was significantly lower than, of course, the halving in 2020 and so on. But even we factored this kind of marginal decline of that halving effect into that model, right? We factored this into like the fact that you have like a decreasing halving effect, and still we ended up at 172,000.
Amazing.
Anyways, yeah, but you asked about like how confident are you in it today? I think the recent market apps it actually made me more bullish than ever, because if Bitcoin is a contender for an alternative store of value, right? Which I think it is. It's definitely the better gold. It's exponential gold, digital gold, right? You have way more utility. It's not only scarcer than gold, right? It has more utility because you can send it online with a simple internet connection, right? And the TAM for this kind of the total addressable market for store value assets or reserve assets has increased, right? If you look at the overall treasury market, right, that has never been bigger, right? The gold market has never been bigger, right? We're talking about like 21 trillion US dollars in market cap for gold, and I think 28 or 29 trillion dollars for US treasuries, right? US treasuries being the new kind of reserve asset in the fiat standard, right? And gold being like the old reserve asset in the pre 1971 gold standard, right? So that market has never been bigger. And if you just assume like that Bitcoin disrupted any of these stores of value, either gold or US treasury or both, right? Which is a very bullish case, but if you assume that Bitcoin disrupted any of these stores of value or just catches up to these kind of market caps today, right? Gets the same kind of market cap, then we'd be speaking about hypothetical prices of like $1.1 million per Bitcoin, $1.4 million per Bitcoin, right? And this scenario has actually increased, I think, right? Because like these fiscal problems, they won't go away overnight, right? They will actually worsen. And this is not my personal prediction. It's like the official prediction, right?
Yeah.
Like the official prediction from government bodies, from like the Congressional Budget Office, that say like, US fiscal deficit will increase from, it's now $1 trillion per year, right? But it will increase to $3 trillion per year until 2030. So it's not too far away. So it will triple even over the next 5 years, right? And if we have a recession, even more so, right? Because during recessions, the deficit increases because you have declining tax receipts, you have increasing government spending for social security, right? Government stimulus and so on. And so, like the debt burden will increase, so the interest expense will increase, so the deficit will increase even more, right? And we're already at levels, I think we're already at around 130% of GDP. I mean, the US is still the US, right? Still the issue of the world reserve currency, but that is increasingly being questioned, right? And that's probably the reason why we're seeing the decline in the dollar we're seeing right now.
Yeah, absolutely. And I'm sure the Bitcoin bulls who were just listening to that answer kind of breathed a bit of a sigh of relief over the last couple of
Yeah,
months.
Yes.
I
definitely.
want, yeah, exactly. A little. I wanted to get your personal perspective on this one because I always love when I'm chatting to investors, um, or market researchers. I always love this particular question. And you having been a private crypto investor since 2014, what is the biggest lesson that you've learned and that you wish you could tell your younger self?
There are probably multiple lessons, right? And I think I
Yeah.
summarized them
Yeah,
in a
hard to say just
Twitter
one.
thread some time ago because, but I think what I regret the most is probably that I've sold too early, right?
Yeah.
Because
All of us do, don't
Hold, hold.
so so if we go like if I can tell the longer story, so it started in
we?
2014. I didn't start with Bitcoin, to be honest, right? My very first coin was Dogecoin.
No,
Brilliant.
no. Say it's not true.
It's true. It's true. So yeah, shame on me, but it was Dogecoin. And the way it developed was actually a colleague from university. He said like, I know a guy, right? It always starts like, I know a guy. He said like, I know a
Great,
guy. He
great
became
start.
he became rich with Bitcoin, and now he says Dogecoin is the next Bitcoin. That was 2014, right? And you always had this kind of, oh, XYZ is the next Bitcoin, right? That was like the general kind
Mm,
of narrative. And because of unit bias, because Bitcoin was, I think back then in 2000, that was 2013 when he approached me. He said like, Bitcoin's already quite expensive. Was that $100? He said like, oh, it's too expensive. Look
Jeez.
at Dogecoin. It was trading at like 0.000 something or in the decimals, you know. And
oh man, that brings
so
a tear to my eye. That does.
at the end of 2013, Bitcoin 10x. You know, it went from $100 to $1,000. You know, and back then I was thinking, okay, that's it. You know, it's way too expensive. Not going in there. You know, and so we bought a bunch
Mhm.
of Dogecoin. We actually, I think we bought 1 million Dogecoins back then. You know, for like
Wow.
300 euros or something. And so, but what happened, of course, after it 5x, you know, and I don't know when we started selling. I still hold a couple of Dogecoins, but it's not like a meaningful amount. But the moment it really clicked with Bitcoin, I think it was relatively late, namely in 2018, when I read the Bitcoin Standard by safety
Mm,
numbers. You know. Then when it started clicking, and I realized, okay, Bitcoin is different, right? It's there's real utility behind it because even back then, there was always this kind of questioning of Bitcoin's utility, right? It's not scalable, it's slow, it's expensive, right? Because of unit bias, of course, but it's expensive, slow, and so on. It's outdated tech and so on. But then it started clicking, and since then, I'd say I've become more or less a Bitcoin maxi, right? But I'm still a realist in terms of I do think there's utility in other crypto assets, right? But Bitcoin is unique, right? Um, you always have to analyze Bitcoin as something else, right? As almost an asset class in its own, right? And that's also probably the reason why the market is commanding such a huge dominance for Bitcoins, like 64%, right? Is so dominant because I think the you will probably get the biggest utility from a new kind of reserve asset, right? Because it has so many other implications, right? We don't know the future about Bitcoin, whether it becomes like the unique and even payment layer for all kinds of other networks, right? But I think it's very unique, and yeah, I just want to say, 2018, very late. But I think, the long story short, what was my primary lesson was like, I sold too early, right? Hodling is the best investment advice.
I think there's
you can
quite a
give,
big club of people telling themselves that.
Yes.
Yeah, I was just going to throw my hand up on spaces real quick. So, yeah, a lesson I think we've all learned, unfortunately. But yeah, one that we definitely want to pass down to ourselves if we could. Andre, I've really been appreciating your time. Just kind of one closing question from myself. Looking at Bitwise Europe, it's been expanding its line of ETPs. What excites you most about their potential impact in 2025 and beyond?
I think in terms of products, if you ask me personally, I think the US guys did a really great product with the Bitcoin Standard Corporations ETF. I think personally it's a great product that we should launch. I didn't say we will, but I would love to see a similar product being launched in Europe sometime in the future. Maybe income strategies with ETPs, also that our US colleagues are doing on either crypto equities or crypto assets directly, right? Covered call strategies, etc. These kind of strategies are growing. I think they're becoming increasingly popular. And I think there's some investor demand for these kind of products as well, because I think because of this bias for like portfolio managers in TradFi, they have this kind of bias that they need to earn some kind of yield, right, on any kind of asset, right? I mean, gold doesn't yield any kind of interest either, but I think these kind of covered call strategies are becoming increasingly popular because you can earn a yield on Bitcoin, right, by writing calls. And so I think that's definitely something that's worth looking into. And yeah, but I think
Amazing.
if you talk about the mega trends, I think I'm most excited about continuous corporate adoption of Bitcoin. I'm excited about sovereign adoption of Bitcoin, ETFs, of course, which is essentially more or less retail adoption still, because even the ETF market's still very much ETF dominated. But of course, we're seeing increasing institutional adoption as well. But I think these are the mega trends. I'm still super excited to see that grow.
Amazing. Honestly, thank you so much for your time, Andre. And just before I hand back to Ryan to close out the space, how can those who are listening to find you?
Yes, so I'm active on Twitter. You can find me on via my Twitter handle, which is at André_Dragosch. Also active on LinkedIn. I'm also publishing a book
There you
in
go.
the near future, which is called Exponential Gold. It's supposed to be an institutional investor's guide for Bitcoin and crypto assets. So tailored to institutional TradFi guys, right, who want to get up to speed on Bitcoin or crypto assets, how to invest, how to allocate, the whole macro story, understanding money, of course, and all these topics. And that I hope to publish it by June this year.
Awesome.
Amazing.
Awesome.
Amazing.
Well, yeah. So to echo what Cameron said, Dragosh, sorry, Dragosh, Andre, thank you so much
Yes.
for being our first guest on the show. Hopefully, we can have you back very soon as well, especially when your book comes out. Definitely, I'm expecting a signed one for PiQ, obviously. But thank you so much for your time. It's been
Yes.
a pleasure talking to you. We'll get this put up onto, we'll get this edited and put this up onto YouTube and our Spotify account and all that stuff. But again, from myself and Cam, thank you so much for your time. It's been great chatting to you, and hopefully we'll speak to you very soon.
Thank you so much. It was a real pleasure. Thank
Cool.
you.
Take care. Bye bye.
Take care.
Thank you.
Bye. Thank you.